Okay, we'll go ahead and get started since it's 11:31. Good morning. I didn't figure, I had a couple of students email me that they weren't going to be able to attend the Zoom session at this time. So I knew it would probably be a small turnout, but it's always good to have a connection option, kind of face-to-face, and you guys can ask questions. I do have a PowerPoint presentation set up that I'm going to walk you guys through. And if you feel comfortable, there's some parts where I will show an account and you can type on the chat your answer, or you can just say it out if you want. It just makes it a little bit more interactive. But the first chapter is really introductory and basic, but it's something we're going to use the entire semester. So what I'm going to do first is I'm going to share my screen with the first slide just says Financial Accounting Chapter 1 Review. So you might holler at me with either a message on the chat. I'll try to keep watching the chat. If it doesn't, sometimes the slide doesn't go to the next one. The second slide what you should see is what is accounting. So send me a message on the chat or holler at me if that is not showing up on your screen. It should say, accounting is a system we use to measure the financial transactions of entities and a system we use to communicate. So that's a broad definition, but you will definitely need to memorize those two key words. I have the one in capital letters, measure and communicate. We use systems all the time. They are basically rules and they kind of give us guidelines, but the accounting definition is not, those are not laws that we have to follow. They're just what we call the generally accepted accounting principles, GAAP, GAAP. It's a guideline for us, but you can get into trouble if you are a publicly traded company and you do not follow the guidelines. So other examples of systems we encounter every day include the system we use when we drive, right? Everybody knows when you pull up to a stop sign, a red octagon or whatever it is, you should stop. And we know what side of the road we drive on in certain countries, and those are part of the rules. Same thing with accounting. You're going to have some rules that you have to follow. One of the basic accounting rules is going to be that you understand the definition of how we categorize every account and how we fit them into our main accounting equation. So accounting is a system that we use to measure and communicate, and those ways we communicate are through three main financial statements. The first one is the income statement, and your statements have to be created in this order. So you cannot create the statement of stockholders' equity and then go back and do the income statement because they are connected. So I create the income statement first, and it will just list revenue and expense accounts. Keep it very basic whenever you are creating the income statement at first, and only look for account titles that say the words revenue or expense. So I don't put cash on the income statement. That is not an income statement account. The income statement is measuring if you charged your customer more, the revenue you're generating is what you're charging your customer. If you're charging them more or less than what it costs you to create that revenue. So if you clean houses and you charge somebody $10 an hour, and then you sit down and you decide you wanted to pay yourself $12 an hour, you are not charging enough revenue to have what we call a net income. You would have a net loss. You would have charged them less, your customer, the revenue you're generating, than what it costs you to provide that service, right? Your expenses are your cost. You have to keep everything basic on the definitions. The word expense is a synonym for cost. And the word revenue is going to have to do with, in the first chapter, providing services. Providing services is your definition of revenue in the first chapter. The second statement then, once you have decided if your company is profitable or not, the net income would relate profit. The net loss would relate that you were not profitable, that your expenses were actually greater than your revenues, so you were kind of in the negative. You're going to take that amount and you're going to add it into the statement of stockholders' equity in what is called the retained earnings account. That is the savings account of the company. That is the internal ownership. The statement of stockholders' equity explains who owns these companies. And so in this class, we're focusing on corporations, but a corporation is like a giant partnership. The internal ownership, the company can create organic worth called retained earnings, or they can have people and other entities outside of their business invest in them and they become external owners. So you have two main ownership accounts. Internal is the retained earnings, external owners are common shareholders, common stockholders. And that is explained on the statement of stockholders' equity, how those accounts increase or decrease. And then your final statement is your balance statement that we're going to, balance sheet that we're going to talk about. There is one more, and we will cover the categories that will be the statement of cash flows, but we actually won't really create that from scratch until the last chapter of the semester. So the balance sheet says, what do you have? What are your balances of all your accounts? The other two explain what happened or how much was generated over a month, quarter, or a year. For the other accounts, the income statement is for a period of time. The statement of stockholders' equity is for some period of time, again, either a month, quarter, or year. But the balance sheet is just what do you have on hand at this point in time? What are your balances of your asset accounts? What are your balances of your liability accounts? So the next section on this presentation is for you to chime in if you feel comfortable, either on the chat to answer this question. You can take a guess or you can say it out loud. If you are dealing with accounting, how do we classify the cash account? Anybody want to take a shot at that? How we would classify the cash account? Your three options are asset, liability, or equity.
It's an asset, right?
Great, perfect, yes. So it's an asset. That is one of your main assets. That assets are things of value, they're resources. Most of them are going to be things you see, touch, or feel. Not all of them, but good answer. Next question, unearned revenue is kind of a tricky one. Again, do you think it's an asset, liability, or equity account? It's also, let me tell you this, referred to in your textbook as a deferred revenue, as revenue that you haven't actually generated yet. I'll help you with this one. It's a liability. It is where somebody has paid you cash and you have not done the work yet. So when that happens, it means I don't call it real revenue. Again, in your textbook, you're going to see it as deferred revenue. I don't put it on the income statement. It is actually a liability, so it goes on the balance sheet. It says if somebody pays me cash, I either owe them their money back or I owe them a service or I owe them a product. So if you rent an apartment with two other people and they give you their portion of the rent in cash, you can't just take that and spend that cash on whatever you want, right? You owe that to your landlord. It's a liability when you receive that money. Next one, common stock. Asset, liability, or equity?
Is it equity?
Very good. It is equity. There are two main equity accounts. And so my clicker is not going. There it goes. There are two main equity accounts. I'll tell you the other one. This one is common stock is your external ownership and retained earnings is your internal ownership. So equity is another word for ownership. How about rent expense? Here is another hint. Equity starts with E and expense starts with E. So we're going to put it in equity. It is saying that those are the cost they take away from ownership. It's think about your own checking account. And every time you receive money, in a sense, receiving cash is not the same thing as earning revenue. But in a simplified version, you would say if you received cash from doing work, that would be revenue. Then you had to pay out some of that as a cost for rent. Your savings account at the end, what you own, what your checking account balance ends up equaling for the month, quarter, or year, is decreased by these expenses. They take away from what you're going to end up saving, what you're going to end up ultimately owning from that month, quarter, or year. So all expenses are part of equity. Accounts payable, asset, liability, or equity.
Liability.
Great, yes. Any account, and this is going to be very helpful for several of you, any account that says the word payable, it means it's something you owe. So it's a liability. It's something you're liable for. So most of the accounts in this first chapter that are liabilities say that word payable. So again, keep it simple. If you're trying to find the liability accounts, look for the ones that say the word payable. The only one that you're going to encounter is that deferred revenue, or also known as unearned revenue. That's a liability. Next, dividends. We're almost done with this section. Dividends are here's a hint, pieces of the profit that you pay out to the owners. So it looks like an expense, but it is not the same thing as an expense.
Equity.
So do you remember where you put the expense?
Equity.
Good, excellent. So dividends are not a required thing to be paid. I'm going to go back to that one. They're not a cost of running your business, but they do still function as a decrease to equity. Retained earnings. Any guesses on that one? No, we got one more after this.
It's equity too, right?
Very good. Yes, sorry, you may have said that the first time, I just didn't hear you.
Okay.
Retained earnings and common stock are the two main overall equity accounts. There are lots of things that fall in that into those segments, but the two main equity accounts are retained earnings and common stock. And then I think this is our last one. So accounts receivable, well, I'll give you a hint. It's not a liability. It's not something you owe. It's actually owed to you.
An asset.
Very good. It's an asset. Excellent. It really represents future cash. So you should be receiving cash when people pay you the money they owe you, right? That's accounts receivable represents that somebody owes you money. Okay. And then the very last section is just talking about, I know on your homework you have two parts where you're going to classify things as either operating, investing, or financing. So when you see on a problem that you have earned cash from doing work, that's the same thing as generating revenue. That's going to be an operating activity. If you had to pay out cash for cost of running your business, it's an expense. It's going to be in the operating section. The statement of cash flow has three sections. Operating are the daily things you do to run your business, but interest is a really tricky one. It always goes in the operating category, no matter why you had to pay the interest or why you earned the interest, because we're going to classify it as interest revenue or interest expense. So anything you think is an expense or revenue item, that's probably going to go in the operating section. And here's a list of examples. The investing section has to do with long-term assets, just like you would do with your personal money. What would you invest it in, right? You would put it in buying a house maybe, or buying a car, or purchasing stock in a company, right? So those items, anytime you buy them or sell them, those long-term assets are investments. When you loan out money, it's going to be denoted as a notes receivable. So notes receivable is an investing activity. And then the last section is the financing. It's how you would fund your business. How would you get cash in order to initially operate your business or maybe make some kind of big purchase, you would either have to borrow the money from the bank, so that would be a notes payable. It will look like notes payable on your accounting records. Or you can issue stock to your shareholders, and that would give you cash in order to purchase things that you need to buy long-term or start your business. Paying a dividend is also a financing activity. Paying a dividend. Any questions on that part? Okay, thank you. So let me check what time it is. Yeah, okay. I will start walking you through this. If you need to hop off at any time, no problem. But mainly the reason I picked this problem is because it encompasses all three financial statements, and everybody has the same problems, you just have different numbers. So if I walk you through this, don't follow my numbers, but follow the process. And anytime you use an account, you're done with, like, the number that's represented on the homework problem, you're done with it. Don't try to use it again. So when we create the income statement, we first want to find revenue accounts. The revenue I see listed on this problem is here as service revenue. So that's going to be the first thing I list. And then I'm done with that number. I write it down on the income statement, 124,600. And the drop down should say service revenue. And then I don't put that account on any other statement. Then it says you want to list any expenses. So I have interest expense, utilities expense, advertising expense, salaries expense. It looks like I have 4 expenses. I do not put cash on the income statement. Advertising expense was $32,900. I know we had a utilities expense and a salaries expense. And I don't remember the other one, but we'll find it. Salaries expense and salaries payable are not the same thing. A salaries payable says you still owe somebody for the work they've done. The salary expense just says they've done the work. I know that can get tricky, but 64.5 is my salary expense. Salaries expense and salaries payable are not the same thing. Find those two numbers. Utilities was 14,900 and 2,900. It already does the total for me of the expenses. So really the last box is just to subtract the total expenses from the revenue. And if you don't fill in this drop down at the bottom, it will say your answer might be correct but not complete. So you have to pick the very bottom box. And in this answer, it's going to be a net income because the revenue is greater than the expenses. So when I subtract that off, it looks like 9,400. And you have to check my work, but when the questions are connected, I really would strongly recommend doing as much of the question as I can before I check it when they are connected like this one is. Just double checking my math real quick. If you are watching this and you see an error, please let me know. So that net income needs to be correct, or this next statement isn't going to pan out correctly. This is always set up with a beginning balance at the top. Sometimes your beginning balance is 0, but it always needs to say beginning balance on that first line. And then I issue common stock, and I know I had a net income, and it has to say add on the net income. And then I also have an option for dividends, which may or may not be something they paid in this problem. So then I go up and I find what are the beginning balances for those two accounts. It says the common stock had a beginning balance of 100,000, and then they issued 11,000 in shares. So what happens is they wanted more money, right? And so they sold more shares, and it goes here, right below it as issued. And there's nothing else that affects the common stock account. I don't put the net income into this account. You can either leave it blank or put a 0 in it. I'm going to put a 0 in it for now. It may count it wrong, but so that you know, I don't put net income in the common stock account. It only goes in the retained earnings account. Retained earnings had a beginning balance of 24,300. So I type that in. I don't put anything in this box for the issuing of common stock because that already went into the common stock account. And this number, I believe it was 9,400 of net income, came from the first financial statement that we created. This statement said that we had a net income right here at the bottom of 9,400. And then I have one other item I need to fill in on the retained earnings category, and it's the dividend amount. It's right here. So that is a subtraction item, but since it already says less over here, I'm not going to put a negative sign. So I'm going to take 24,300. I'm just going to double check this math on my calculator. I'm going to take 24,300 and I'm going to add 9,400. And I'm going to subtract 4,600. And it says 29,100. And then I have to add a cross on all of these. So 124,300, 11,000. And then you can double check that you did your math correctly by adding and subtracting down and adding across the bottom. So it should equal in the corner. You could check your work if you want at this point. It will take up one check my work, but you need these bottom numbers to be correct in order to get your balance sheet correct. So I'm going to go on and then just check it at the end. So everything that's left that I haven't used yet, if I've already used a number, I don't want to use it again. Everything else should go on the balance sheet. We already discussed initially that cash is your main asset that you want to list. So in order of liquidity, cash would be written down first. I'm going to put that on my balance sheet in the asset section. It said it was 4,900. And then I'm going to go up and find any other assets. Buildings is an asset, and so is equipment. But I would typically also list accounts receivable if they had one of those accounts here, and supplies and prepaid items next before, because those are all short-term items. Oh, got a question here. You don't on the dividends put it in, I believe, as a negative sign. I will double check that when I hit the check my work, because it said less on the side, but I will double check that, Sarah. I appreciate that question. I will double check. So let's see here. The building was 144 and the equipment is 24. I took my cash off of there. Building 144 and equipment, I think it said 24. I can't remember for sure. I'm going to double check these numbers real quick. I love the balance sheet because it's kind of a check my work before you hit the check my work. So I'm going to total up these assets, and that is what the other side, this total equity over here, should equal. I'm going to get the liability accounts from the top, how we discussed, from the account titles that say payables in them. Accounts payable says I owe people money or other entities money. So that was 5,800. And then we had a notes payable. And the notes payable was 27,000. And then I'm going to put my 2 equity accounts at the bottom, common stock, which I remember it was 1,1. And then retained earnings, I believe that was 29,1, but I will double check over here. So where I'm getting these numbers is from the bottom section here, right here. And then this needs to balance. So these two numbers have to match at the bottom, and they do. 172,900. I'm going to hit the check my work because I want to check what Sarah was talking about. The computer is very picky about formatting, and so if it wants a negative sign and you don't put a negative sign, it will count it wrong. So my balance sheet looks good. My statement of stockholders' equity looks good also. I didn't have to put a negative sign on the dividend because it already said less over here, but you've got to watch the direction on the homework. And then my income statement is all correct. Green check marks. So any questions on that problem? Any questions on anything else from the class? Okay, I will probably do another Zoom session next week because your second exam has to be proctored and it can be challenging to understand the terminology of debit and credit. So you really need to know that before you take the second exam. But you will have to create these financial statements on the first exam. I would have a format already ready, like an example set up on your computer, either with Word or Excel, where you could process a problem very similar to this that I just walked you through on your exam. So, sure there's no other questions? Okay. I appreciate you guys showing up, and contact me anytime. We can do one-on-one Zoom or just email. So,
Thank you.
all right, you're welcome. I appreciate it.
Bye.
Bye.